Hi, I'm Andreas van Horst. I'm the Global Equity PM at Mazi Asset Management. We're a South African-based firm. Our global equity capability sits in Cape Town. Today I'm going to chat to you about our approach to global markets and how we navigate global equity. The key problem that we're trying to solve in global equity investment is that when you're dealing with a universe of 97,500 stocks, is where do you start? What do you pick? What's the process by which you identify investment opportunities that might be attractive to you and may over time deliver a return that's above the benchmark? There are quite a number of strategies out there. You can passively invest in the index. You could be a growth investor. You could be a value investor, a momentum investor. You could look for quality businesses. You could do some combination of those. As you step through those various investment strategies, you find that they have different risk and return profiles, and in some cases they'll give you a decent return above the benchmark but with substantially more risk. Our focus at Mazi is to own really great businesses that have the ability to grow under their own steam for a long time, that are intrinsically profitable, and then to try and get the valuation also right. We believe that's the sweet spot in which we can deliver over time a meaningful outperformance of the MSCI equity benchmark. When we talk about quality business, what is it that we are looking for in our day-to-day work? We're looking for rational capital allocation. In other words, business decisions that make economic sense. We are looking for a team that knows what they're doing, that are really technically competent and honest. There's integrity in the business. And then we take it a step further. We want a team that is building its business in a way that every year that business is more competitive and has an even more unassailable position. We call that economic moats. And the best ones are the ones that are invisible, strong brands, products that people and services that people consume every single day, which they cannot do without. Think about toiletries. Think about the desktop apps that you use in Microsoft, for example. Think about that. So we're looking for those types of businesses that clip the coupon all the time, every time there's a transaction with a customer. Moreover, those businesses must have growth runway. So there must be stuff happening in that business, and that management team must be able to sustain the growth. And that growth must be profitable. So it must generate genuine, free, unencumbered cash flows that can importantly be reinvested in the business in tomorrow's growth. In other words, we're looking for businesses that have this virtuous cycle of being able to reinvest their profits and become bigger and more profitable as time goes by, and releasing an ever greater stream of cash flow that belongs to the shareholders and not to other funders or to the customers or other stakeholders in the economic value pie of that business. In global equities, time in the market matters tremendously. You may not know this, but the average manager actually turns his or her portfolio 80% in any 1 year. If we want to think about it in different terms, take something like the Premier League in the UK. Every team plays 38 games. You start with 11 players. After the first game, you swap out 9. After the second game, you swap out another 9. There's no way you can win the Premier League with that type of strategy. You can't develop shared understanding, develop strategies together, learn how to beat the opposition. You can't do that. Why would you want to do that in portfolio management? If you're turning your portfolio all the time, you have no chance at beating the benchmark. Time in the market matters tremendously. Microsoft is a good example of a quality business that you'll probably know. You may not know this, but it is one of the all-time compounders in the last 50 years in dollar terms in global equity markets. It's gone up 4,470 times since its IPO. That's the reason why Bill Gates keeps on getting richer despite selling more and more of his stock. He can't keep up with the price growth. The key thing to understand about Microsoft is that when should you have bought the stock? When should you have sold it? Should you ever have sold it? There are various arguments and discussions and debates in markets about Microsoft, whether it's a cheap stock, is it an expensive stock. But the undisputed conclusion is that this type of business, when you find it, you should hold it for the long term. Swedish Match is another quality company that we own. The business has been around, in fact, since 1917. Making matches and then subsequently cigarettes. It has gone up 72 times since its listing in 1996. But Swedish Match is interesting for a couple of reasons. One, it's a tobacco company gone good. It's divested of all its cigarette and combustible tobacco. And today they're the leader in what we call modern oral. Those are these tobacco pouches and nicotine pouches that people put in their mouths and they chew. They are the leader, in fact, in the North American market. They've got 50% market share of modern oral tobacco, and that is only 1% of the US tobacco market. They have an enormous growth opportunity. They're the number 2 player in the Nordic countries, and they have almost no representation anywhere else in the world. So you can see there's just this massive opportunity that lies ahead for them for many, many years as we transition to a less harmful nicotine consumption world, a smoke-free world as we transition. And so this business is exceptionally well positioned. The management has been tremendously disciplined and rational in their capital allocation. And today we have a business that is super profitable with many, many years of growth ahead of it. When you think about a portfolio of quality businesses, what do you expect to find in there? Do you expect to find some quite young businesses that are full of growth and full of excitement and lots of profits? Or what is the character of those businesses? And quite simply, quality businesses are time-tested and durable. They've seen recessions, they've seen wars, they've seen market disruptions, they've seen inflation, they've seen all kinds of things. And yet through all of that, those businesses have managed to survive and thrive and remain intact and maintain their pricing power and maintain and grow their end markets. And as the world has changed, they have changed with the world. In our portfolio, in the Mazi Global Equity portfolio, more than 82% of our businesses are more than 30 years old. In fact, 10% of our businesses date from prior to the 1900s. They were established in the 1800s. Hermès, Louis Vuitton, Reckitt. These businesses have been around for quite some time. And so you can go through the list. Quality businesses are durable. And above all, they're time-tested. Sometimes it helps to think about your stock universe and your portfolio and the options available to you as an investor in terms of things that you don't want to own. We generally don't want to own cyclical businesses. We don't want to own businesses that owe their existence to somebody else's money funding it, for example, banks. When we look at a sector like mines and minerals, as we show here in the slide, you'll see the green line. The green line is essentially what is the return being earned on the capital invested in that business. And the red line is what is the cost of that capital. When you're above the red line, you are generating shareholder value. We call it EVA, economic value added. And when you're below, you are destroying it. When you look at this slide, you can see that the mines and minerals sector, and that's about more than 220 companies globally, is firstly highly cyclical, and secondly, for most of the time, it destroys shareholder value, except during short-lived periods of price-led commodity booms. The companies that we are looking for have a wide purple band. That is, they earn a substantial return above the cost of the capital in their business, and they do so persistently over time. If we look at Swedish Match now and say, well, what does its purple band look like? You can see over the last 27 years what the story is. The company earns about 70% on the capital invested in it. That capital costs 5-6%, and that return over that is 74%. That is a massive, massive return on invested capital and massively EVA accretive over time. And it does so persistently, and it gets better and better at that as time passes. Compare that with mines and minerals, where you're doing 1% over the last 30 years on average on the capital investment and the amount of risk that you're taking. It is very clear what type of business we want to own. It is this type of business that can substantially beat the benchmark investment return. We've developed a data analytics engine, and we've developed the algorithms to capture the key parts of our investment process in terms of what we look for in quality businesses that are profitable, growing, and then at the right valuation. Our data analytic tools allows us to reduce that 97,500 stocks to a manageable group of companies that we can systematically analyze and put through our fundamental investment research process. We developed a data analytics system called ZuluGirl. ZuluGirl is actually named after the yacht that Mazi sponsored in the 2020 Cape to Rio race, where we sponsored the first black team to navigate from Cape Town to Rio during the race. And we thought it was a very nice name to name our data application to help us successfully navigate the global equity universe. The key thing about ZuluGirl is that over time we've tested more than 100 different factors to understand and capture our investment process, to shortlist the types of businesses that have a better than random chance of beating the benchmark return over the next quarter, over the next year, and in the years to come. And it's systematic over time. That's the key thing. So this works in low interest rate environments, high interest rate environments. It works in environments where certain sectors surge, where others don't. And our data models are able to identify those stocks that have a very, very high probability of delivering above benchmark return. ZuluGirl every day crunches an ever-expanding data set. So we've got 27 years of company fundamental data for pretty much every company in the world, and then daily pricing signal data from markets. And this data set keeps on growing and keeps on expanding, and every day ZuluGirl runs and tests and expands on the factors that are in there to better understand and analyze that universe. In the last 2 years, advances in cloud computing and machine learning have dramatically improved our productivity and our understanding of this huge investment universe. It's always important to come back to basics. At Mazi, we are a fundamental house. We spend our time kicking the tires, doing the research, understanding the business, and having a systematic research process. So all the work that we're doing in ZuluGirl is really to be able to work efficiently, to understand the universe, and to have data-driven, evidence-based decision support for how we should spend our time and productive efforts. Once we've shortlisted and identified a group of stocks, we still spend an enormous amount of time understanding those businesses, traveling, kicking the tires, triangulating our investment views, talking to competitors, speaking to suppliers, and understanding genuinely whether these businesses are intrinsically worth owning for the long run and whether we'll sleep well at night when we do own them. Once you start embarking on the path of data analytics and machine learning applied to the global equity universe and to your portfolio, you start unlocking some incredible tools and some incredible capabilities and insights. And one of those is risk management, which is absolutely crucial component of any investment process. ZuluGirl empowers us on a daily basis to really understand on a snapshot basis what our portfolio looks like relative to our benchmark. What is the intrinsic health and the characteristics of that portfolio, and how does it stack up against the rest of the world? It helps us to identify problem areas and to identify areas for allocating more incremental capital. The key point about this is that if you're managing global money, you need to have the tools at your disposal to, on a real-time basis, compare the cards in your hand with the cards in the deck. Mazi is unashamedly a fundamental bottom-up stock-picking house. There's no doubt about that. That's in our DNA. But you can't stick your head in the sand. The macro keeps on changing all the time. And so when you're managing global money, if you want your investors to keep the faith, you've got to understand that your investment strategy, whichever it is, consistently executed, will underperform in certain periods of times. And you need to see when that underperformance is starting to come over the hill and how it is affecting your portfolio. And to that extent, to that end, ZuluGirl gives a very, very powerful set of tools to understand exactly what's happening in interest rates, what's happening in various sectors, how is that working out on our portfolio, how is that playing out in global markets. If you want to manage global equities, you've got to have the real-time data analytical tools to understand the impact of the macro on your portfolio. If our investment process and philosophy resonates with you, and you like our approach to global markets, please get in touch.